Hi, this is Shane with the Rational Trader. It is Saturday the 12th. This is the end of week video. This is the first really losing week that I've seen since I started this move to markets that aren't quite so volatile from starting here on 11/26. So these are the results for the week. And this is in tandem with some changes I made to a more aggressive posture. All right, so I did two things. I went more aggressive and I added more markets. So let's take a look and see if, sort of where is this coming from? And then I can tell you what I'm going to be doing. The first thing to look at is oil, because oil has been the primary driver of much of the gains here. So if we take and the question that I asked myself was, is the more aggressive approach causing this issue? All right, in oil. So let's go take a look at oil. We're currently looking at everything, non-sim. So this is real dollars here. Let's look at oil, just oil. So that's CLG9. Yeah, G9. So this is oil, G9 for the week. Okay. So you start off plus 110, plus 230. So you're at 340, off to a reasonable start. 2 max loss days, and then plus 30, so scratch. So what is that? Minus 280, minus 250 from 340. $90 plus $90, so basically flat on the week. Not a disastrous week by any stretch. Certainly if that's the worst week you ever see, you'll be really happy. All right, I was curious though, what would the oil week have been had I stayed with the conservative approach? I wanted to see what what that would have looked like. Understanding that the more aggressive posture, I expect to take more these days, but in the end, I also expect to make more, on the order of 16, quite a bit more, 50% more. Okay, so what I did was I ran that conservative posture, those codes for a replay for the last week, and that's what this is right here. Okay, Sim CLG9. Okay, so we had, in fact, let's do this here. Let's take a quick snap of that, and then we can easily compare it. So this is what we want. Okay, so we'll put that over here. And now let's look at the Sim. This is the more conservative approach that I was using prior to Christmas. Okay, so the first day is really nice, 460 on Monday, and then it just gets kind of blah, right? Not too much on Tuesday, basically a scratch day. Small loss on Wednesday, a little gain on Thursday, a scratch day basically, and then a max loss day on Friday. All right, and so when we compare these, what we see is this was running P&L plus 300. This was plus 90 over here, plus 90. Not so nicer, but not. There's not a dramatic difference. I don't see, massive losses every day over here. And it's only 5 days, so it isn't enough to draw the conclusion one way or the other that the previous method was better or worse. Okay, we don't know yet. It's not obvious. So what I'm gonna do is stick with the current set of codes, which is or behaviors, the current aggressive posture in oil for next week. So no changes there, which means I got to flip all this back from it's currently set up to Sim. The conservative codes you can see right here, conservative, and then I had kind of the same question in gold. So in gold, when we look at gold, that's GCG9. So that's here. There were only 3 days where we took trades. Okay, so already I'm not concerned, because when you run into trouble is when you're taking a lot of trades and getting whacked a lot. And the way we're set up is that if there's not a lot of movement in the market, you don't take trades. The other case is where the market will break hard above or below the value area edges and then not pull back. It's the same thing. You'll end up not taking trades. In that latter case, there will be movement, but you just can't participate in it. So what we don't want to see is we don't want to see cases where there's lots of movement and you're taking losses. That's the problem. All right. But I was curious to see what would happen if I also didn't switch to an aggressive posture in gold here. And so that's the simulation you see running in the background here. I just started that, so we'll see what that turns out to be a little bit later. It'll take a while to run, but in general, I'm not terribly concerned here. Okay, so likely no changes in my approach to gold next week either. Okay, let's take a look at the yen. So that's 6JH9. Now, this did not have a good week, but it's by no means horrible either. Okay, down 150. You didn't have a single winning day here. Only a couple of trades that did okay. So there's something to think about here. Is it just one of those weeks, or is there some big problem? At this point, this is using a conservative approach in the yen. It is using it's using a sort of a faster range bar, because I was trying to make sure I had the opportunity to catch the moves, and there's less volume in that market. There's less moves. So this market I'm undecided on, but I'm not terribly concerned. So we'll see. I'm probably going to give this another week exactly as is, without any changes. Let's take a look at the euro now, because this is where all of our issues are. So my members that aren't trading the euro are pretty are happy. The ones that are unhappy. Here's 60H9, and what we see here is max loss day, max loss day, max loss day, and just under a max loss day. So 4 of the 5 days you were getting whacked. Now what makes it kind of okay is that you're not risking as much. But it's still, most of the losses for the week are right there. In fact, if we change this to, well, anyway, we can just add it up. 87, 87, 87. There's, 250 right there. 320, call it 300 of the losses right there. That's easily the majority of it. And so the question is, kind of what do we do about that? The 6E was similar to 6J in that there wasn't as much movement as oil, and so I found that I had to go to a different analytical process. It sort of what drove some of that desire to try a different view of the machine learning output. And so that was discussed the last 2 days. So go watch those daily videos. It would be the video for Thursday and Wednesday of this week. So what are those dates? The 10th and the 9th, where we talked about that in some detail, what those differences are. And so what I think here is that I need to, at a minimum, switch the 6E back to a more conservative approach. Okay, I'm actually going to redo that analysis from scratch and stick the euro into sim next week using whatever that analysis comes up with. So members, you'll get a message on what that looks like. I may have I may have rushed into the euro a little too quickly trading live. I have noticed that I've been more inclined to do that as the technology has matured. The analysis looks okay. I don't like what I'm seeing here because it's what I mentioned earlier. There was a fair amount of movement in the market and you're getting whacked. And that's not what we want to see. We want to be more selective. And, even with a market that has a lot of movement like oil, you're still, you're getting better. You're still selective on where you're choosing to enter. Okay. So, two things then. The 60 is going to go into sim no matter what for next week. And I'm going to redo that analysis. I'm going to try and get it done by Sunday evening so I can get that information out to the members to try to mitigate some of this and at least better understand it. Now, we were talking earlier in the week about really I changed two variables at once, and that's not necessarily a smart thing to do. One variable was the aggressive posture. The other was adding two more markets live. That was the yen and the euro were added. So it occurs to me that another approach is take the market that is doing well for you, which in this case is oil. That's the one that's really driving the profits right now, and use an aggressive posture in that one, and then a conservative posture in the others. Okay, so that's not something I'd considered before. Or just go conservative everywhere and then just you don't have to worry about it. That would be the other approach. All right, so that's it for this video. I'm going to, so for members, the models are done. They'll be going up shortly for next week. And then some analysis will be coming out for the euro for next week. And I'm going to be in sim on the euro next week. And then I'm going to go no changes in oil or gold unless something dramatic shows up here in this test. I really doubt it. I don't think it would change my mind. The yen would be a question. I'm inclined to just let it go as is. Just because we're only taking 6 ticks of risk per trade, 2 trades per day. It's really not that much. And so you can just leave it live and then get some good data that way as opposed to switching it over to sim. So that's what I'm likely to do. We'll see no changes in oil, gold, or the yen next week. Euro is going to go to sim and it needs some more analysis. Something's up there. It's possible that there's an error somewhere in the system. I don't think so. I think it's just a function of the change in that analytical approach is not as predictive as the previous one. And that's my attempt to get more, try to get more out of the market, more out of the moves that do happen, and then also looking to see if using more data is less relevant than using less data that's more recent. Okay, so that's kind of what drove that change in the analytical process. Okay, so that's where we stand right now, and I will see you next time. Take care.